Hey, what's going on, guys? While stock market continues to get punished, Bitcoin and other cryptocurrencies are actually unchanged. In this video, I will present my strategy for cryptocurrencies in this bear market, and I will explain what impact economic crisis will have on Bitcoin. Let's take a quick look what is going on with stock market. S&P 500 today opened 4% down compared to yesterday. Right now, we are below $2,400 a share. We are down exactly 30% from its all-time high, which was around $3,400 a share. So we are down exactly 1,000 points. As I mentioned in my last video, the Federal Reserve dropped interest rates to 0% and announced $700 billion quantitative easing program. Also, there is a lot of bailout is about to happen. First companies on the list are airlines, cruise stocks, and probably retailers. These monetary stimulants was Fed's last resort. They are our weapons. If it's not going to work, we might see even more damage than we have seen in 2000 dot-com bubble and 2008 global financial crisis. I think economy and stock market will continue to decline until we find a cure for this pandemic. I believe we will start to recover sometimes in the summer, but by that time stock market can be way lower. Let's talk about Bitcoin and cryptocurrencies. It's been a while since I done a video about Bitcoin. It's not because I did not want to make video about Bitcoin, it's because there is so much chaos is going on around our economy, so I had to keep informed and keep updating our viewers. Unlike stock market, crude oil, and even gold, Bitcoin and Ethereum stays unchanged today, or even slightly in green, at least as of the time of this video. When stock market dropped by 30% since the past 4 weeks, Bitcoin dropped by 50%. Many people start doubting cryptocurrencies and asking questions such as, what should I do now? I have to sell, it's going to go way lower. Well, it's definitely a possibility, but that's not what I'm doing. I'm about to deploy my cash and put it to work. Prior to this drop, I had about 40 to 50% of my total portfolio in cash. This is my game plan how to invest in this market. I'm not going to use my entire cash position in one time. I believe it's going to get worse, but I also don't want to be a market timer, since it usually doesn't go the way you want it. I'm planning to buy Bitcoin and Ethereum at around $5,000 per BTC and $115 per ETH. It sounds like a bargain to me. I do not know how about you, but when everyone is selling, this is the time to buy. At this time, you will feel uncertain, you will feel fear, and you will feel doubt. But trust me, this is the best time to buy in when everyone absolutely hates that assets and when there is a blood on the street. I'm not afraid to catch a falling knife and get my hands a bit bloody. These feelings are very familiar to me. This is how I felt when I was buying Bitcoin under $4,000 in early 2019. My game plan is simple. I want to use 50% of my cash to buy stocks and oil, but not now, probably somewhere in the summertime. I will make another video what exactly I'm planning to buy. Another 50% of my cash position I want to distribute between Bitcoin and Ethereum. Let's suppose that I have $20,000 to buy Bitcoin and cryptocurrencies. Currently, I will spend only $10,000 on Bitcoin and Ethereum, and another $10,000 I will hold on my account. Just in case if cryptocurrency drops lower, then I will put more money to work. What I like about Bitcoin is that it does not need to get bailed out from the government. It does not carry third parties' liability, just like everything else in this modern financial world. When stock market dropped, why Bitcoin declined so much? Wasn't this supposed to be a safe haven asset? Wasn't this supposed to be a digital gold? Let's take a look what real Bitcoin Jesus Andreas has to say about this matter.
Andreas, what do you think the next global economic crisis looks like for cryptocurrencies, digital assets, and distributed ledger technology?
Well, I mean, that's obviously an almost impossible question to answer because it's highly speculative, but I'll do my best. I think we're already on the verge of a big economic crisis. I think the situation that's happening in Asia with the spread of COVID-19 is going to precipitate an economic crisis, at least by damaging supply chains, even if it doesn't turn into a pandemic. So that's certainly going to be blamed as the reason for the economic crisis. But a global economic crisis has been coming for 10 years. None of the problems that happened in 2008 were fixed. And while I'm not an economics expert, I think the average person really can understand that a lot of it was just swept under the rug and bailed out, and the average person isn't much better off than they were then. How does that impact cryptocurrencies? I think that there's a tendency within the cryptocurrency space to look at this as an opportunity to test cryptocurrency as a lifeboat, as a safe haven. And I think that's a terrible attitude to have towards an economic crisis, because I think there's just as much chance that a slowdown in economic activity, especially in the tech sector, will reduce the amount of investment in the crypto space as well, which is part of the tech sector, and will cause a lot of people who are currently speculating to retrench and avoid investments that they see as perhaps also risky. So this could cut both ways, and we shouldn't be gleefully expecting to test the security of the lifeboat by sinking the ship. We're not ready for that kind of test. Cryptocurrency is not capable of supporting the scale of millions or even billions of people who might need to use it during an economic crisis.
But do you think that cryptocurrencies will be at that point where they're able to support those millions, tens of millions, billions, whatever it might be in the future? And if so, is that a light that you can see somewhere down the tunnel, or do you think this is still a long way off when it comes to the state of cryptocurrency technology and markets?
No, I absolutely think that the future of finance worldwide will be with much more decentralization, based on open protocols and open systems that can reach everyone, with a reduction in the need to authorize and vet participants, and instead build security mechanisms that do not depend on vetting, but depend in the kind of game theory that we see in proof of work and proof of stake systems and other consensus algorithms that might emerge. The future of finance is open, decentralized finance, and it will help bring the whole of humanity into an economic system that everyone can access. And I think that's going to happen. It may take several decades, however, to emerge that way, not because of the technology, but because of the geopolitics surrounding it. The ability of governments to control money gives them enormous power, and they're going to fight tooth and nail to preserve that power, even at the expense of their own people.
But to be clear, you do see the primacy of cryptocurrency or distributed ledger technology in some form or another as an inevitability.
Yes, open financial systems are more efficient, they're more equitable, they're more transparent, and they solve all of the scaling problems we have in the effectively industrial age financial system we have today, which is based on hierarchical systems of oversight and control that do not scale to solve global problems, and do not scale to include more than half of the human population that is automatically excluded from these systems. A system that excludes more than half of the human population is not a system that can survive in the future. We have to do better. And I think open finance will do that.
Mm-hmm. I want to touch on that point you made there, that idea of equality and equity in the global financial system. Now, according to the latest numbers coming from the 2019 Oxfam report, the world's richest 1% have more than twice as much wealth as the bottom 6.9 billion people combined. Now, this is a point that is often addressed. Many out there, I'm not far from the first to bring up the point of global inequality and these sort of issues. And this is something that you yourself have brought up on a number of different occasions. How exactly, without maybe not a step-by-step, but sort of in a sequence, how do you envisage the open financial world changing that metric significantly?
Well, the fundamental issue that breeds inequality, some of the fundamental issues that breed inequality in economic systems are lack of access, so barriers to entry. If you can't even participate in the system, how can you possibly succeed in a system like that? And the fact that these hierarchical systems encourage the kind of parasitic rent-seeking behavior that is anathema to capitalism. You know, they don't enable free and open markets. What they do is they create concentrated, regulated monopolies that corrupt the political system, which in turn corrupts the economic system, in a cycle that just basically funnels billions to the top. So one of the ways you break that cycle is, first of all, by opening the door to everyone to participate and not keeping people out. And secondly, removing the opportunities for intermediation and parasitical rent-seeking that arise in hierarchical systems. In a system of finance that is hierarchical, the higher up you go, the bigger the flow of money, and all you have to do is stick a straw in that pipe and suck out as much as you can, which is essentially what global investment banks are doing today to the world economy. You can't fix that inequality without changing the architecture. And that's the fundamental way that open financial systems like cryptocurrencies and open public blockchains change things. They change the architecture so as not to funnel things into centralized control and monopoly.
So then would you say that you see these open financial systems at their core as inherently revolutionary? And does that take on the form beyond the financial world of the sort of street level revolutionary experiences that have rocked the world in the early part of the 21st century and certainly through parts of the 20th century?
Without a doubt. What we're talking about is a continuation of the same information revolution that started in the 1970s and 80s with the internet. This is a natural extension of that. The internet first made information and communication free. Then it made it possible for people to communicate with the entire world from anywhere, which effectively broke traditional newsmaking, but it also opened the door for a lot of people to get their ideas out. And it made it much more difficult for dictators to suppress communication, which has led to a number of both violent and non-violent revolutions and upheavals. This is just the extension of that, in that now the internet is making money open and free and global, which means that in the internet of money, you cannot censor financial transactions and you cannot take a whole population hostage to a currency experiment. And that will inevitably shift power from nation states and very, very large multinational corporations to individuals who take control of the money system into their own hands. That in itself is going to create revolutionary effects. But at the same time, you've got to think of this more broadly. This is a scalable system of trust based on network communications. We now have protocols for achieving trust over the internet. And that's going to change other things, not just money. It's going to change the allocation of governance, for example. We're going to have new models of governance and politics that are going to be based on network protocols too.
I would have to agree with Andreas. Economic crisis is not that great for Bitcoin and cryptocurrencies. And here is why. There will be a lack of investment in tech sector and therefore in cryptocurrencies. But most importantly, we will be in deflationary state of economy, which means people will try to sell any asset or anything for that matter to run into cash. In such downtrending state, consumers get scared, they panic, and when people panic, they do not think rationally. They use their emotions to guide their financial decisions. The same goes with Bitcoin. It's not so much that people do not want to hold Bitcoin, it's just many speculators and weak hands in this game. In addition to that, many marginal traders get liquidated and are forced to sell their positions, which creates downtrend selling pressure. In the end, I don't really know how low Bitcoin is going to go, but I know that for contrarian investors, price is the most important thing, and for me, lower prices makes a lot of sense to buy in. Let me know what is your strategy in this bear market. Leave your thoughts in the comment section below. Hit that like button and subscribe.